just be starting the panel now, and our moderator, Mr. Ken McGee, will take us forward from here. This is a 45-minute panel, and after this panel, we're going to be hearing from Sonangol. Thank you very much, sir, for coming. We look forward to hearing from Sonangol. Right now, it's over to our E&P panel.
Thank you. Thanks, James. And thanks to everyone. I think it's still morning, so let me just say a quick good morning. I think this is going to be one of the most exciting panels of the conference because we're going to try to wrap up some of the things we've already heard and set the stage for future things. Just want to say first, I'll introduce myself and give everyone a minute to just introduce themselves, and we'll start in with some questions. And we're going to save a few minutes at the end for some Q&A, because I know when I've been sitting out on the other side, I always wanted to have the chance to ask those up here something before we all break. So with that being said, I'm Ken McGee, and I just come to this through a lot of time working in Africa, first with Bechtel and EGLNG Marathon, Tullow, Noble Energy, and a little stint in between with USAID, but all of it was involved with oil and gas, and especially on the CSR and the ESG side of things. So my focus is really on the people projects and the investment, and I was glad to hear Scott bring some of that out in his talk. So that's where we are. We've already heard this morning from Equatorial Guinea, Uganda, South Sudan, Liberia, Somalia, DRC, Namibia, Botswana, and now, and last but not least, the city of Houston. And I think one important thing that was said by the gentleman from Uganda was, it's now time to run to Uganda. I would just change that a little bit to say, it's now time to run to Africa. And these folks here are going to help us understand why. So Steve, if you'd first introduce yourself. This is Mr. Stephen Hightower, president of Hightower Petroleum and president of HP Energy. And just say a few words about yourself, if you would, Steve.
Well, first of all, thank you very much for giving me this opportunity to speak before this distinguished audience. From Middletown, Ohio. And back in 1981, I had my first petroleum contract to sell to the state of Ohio. And from that first contract, in 1981, probably in 1982, I went on a trade mission. Can you still hear me? Yeah, I went on a trade mission to Africa, and we stopped at Cairo, Egypt. We went to Cameroon. We went to Ivory Coast, and we went to Nigeria. And it was that experience in Nigeria in 1982 that changed totally my whole mindset about the oil and gas industry. Fast forward that till the day, 40 years later, we wholesale gasoline and diesel throughout the US, Mexico, and Canada, with an office also in South Africa and a partnership in Nigeria. Right now going through the process of seeking a allocation for Nigerian crude. One of the things that we have evolved to in the upstream is, as we just talked about, gas to power is gas to liquids. And we have a technology that actually goes into the oil fields, capture that flared gas, turn that into liquid fuels, diesel fuel and jet fuel with virtually zero sulfur. It's a renewable, and it also produces water right there on site. So we think that we've got a solution and a technology that would be beneficial for the continent of Africa, as well as here in the US, that would reduce emissions, stop the flaring, and come up with a financial outcome for our customers. So with that.
Thank you. Thank you, Stephen. Now, next to him is Mr. Ernest Onoma, and Ernest is the general manager of ISTA International, and we've talked our paths, cross path in Ghana and other places. Say a few words of introduction, if you would, sir.
Welcome to this forum. My name is Ernest Onoma. I'm a lead of a team of, call it legacy. When I talk of legacy, this team is made up of people from the mining industry, all phases of oil and gas, and also in the renewable. This team is also not only invested in the legacy business, but also taking the legacy business a little bit further to provide solutions. And this team has that capability of the IT technologists in the current world setting to take our legacy mining, oil and gas, and renewables to the next step. And so we are solution providers by taking this data, doing analytics, providing security and operations, cybersecurity. We also looking at solution architecture, where we provide solutions, analyzing your data, coming out with a platform, mirroring your financials, so we can give you that platform that solves your problem. So basically, the team of financial and also technical experts, we provide solutions to the mining, oil and gas, renewable. And the good thing about this team is when you listen to what comes out from our Cape Town Africa Energy Week, it says that Africa business has to be discussed in Africa. So this team has that capability as principally African Americans or Africans that grew up in America and also in these technologies to transcend and go back to provide local services in this part of the business to the African continent.
Thank you, Ernest. And if I could take my moderator's prerogative, Scott, to pass over you, since you gave an introduction, we'll come back to you. I'll give you the first question. How's that? But next, for a brief introduction, Mr. Jason Fear. Jason's head of business intelligence at Potent & Partners. Jason?
Oh, thank you. Thanks for the introduction. Also for the invitation to participate in this conference. I work for Potent & Partners. We're a company that specializes in LNG, LPG, and in particular marine transportation of fuels. We also have quite a significant consulting business. I run our information and analytics business focused on forecasting. We've spent quite a bit of time over the past, I guess, decade expanding our business in Africa. We work quite a bit with an MPC in Nigeria. We've been supporting project development in Mozambique and Egypt. So our business sort of focuses across the value chain in terms of upstream where gas is coming from, whether it's going to be liquefied and transported, and then consumed in power projects. So happy to sort of share that expertise with the panel.
Excellent, thank you. So you can see we've got the right people on this panel. So let's get right into the questions. And I'm going to ask you first, Scott, and I will play timekeeper, okay? So don't anyone get offended. But we're going to let each one answer this first question. And the first question really is, what, in your opinion, and you touched on some of it, but what are some of the high reward kind of investment projects that are out there right now for us to consider? Things that folks in this audience would want to take home and really study and have potential, in your opinion, Scott?
Well, so obviously from the ReconAfrica business model perspective, it's the scale of an opportunity. You know, from my Exxon days, you know, we're trained that there are, you know, a good portfolio has large projects with a bit more risk, but the reward could be quite a bit higher. And you balance that with, you know, say production risks. You have some production fields which have, say, lower risk, but a little more bounded in what their returns could be. And so I think Africa has both of those. I think, and in particular, you know, a lot of indigenous companies are quite good. Obviously there's US-based companies that are quite good. Exploration is shifting, I think, to a certain degree from some of the majors to the smaller companies, particularly onshore. But production, there's, I think, a lot of wonderful opportunities in older fields that with prices and maybe technologies can be good investments.
So, Steve, I'm going to ask you that same thing. Specifically, are there some high reward projects, some things out there that you really have your eye on that make a lot of sense for this audience?
Yeah, you know, again, when we talk about scale, 50 to 500 barrels per day on a modular refinery, basically producing renewable fuels such as jet fuel and diesel fuel right there on site I think is something that people can take at a bite size, all right? And you can have multiple ones in a block without necessarily, and producing that kind of volume without necessarily, as he's looking at, the entire country, all right? And so, you know, just understanding the fact that we have producers that are being fined, you know, with all the emissions and the flaring and all that, and you can stop that and turn that into diesel and jet fuel right now, as well as water. And you look at the need for water, and you look at the need for refined products in a small, scalable, you know, type project. I think that is really the ideal, something that many people can do versus looking at what we can do for an entire country. Size.
And that would probably work across the many countries.
That can work across the board.
Thank you. Ernest, what do you think? What's a high reward project that you see out there that's worthy of our attention?
Well, there are a couple of high reward projects. First of all, the LNG is a very high reward project. And this works well because most of the African countries are now looking at their flare gas commercialization policies and projects. So Africa is energy deficient. We're talking about eradicating Africa energy poverty by 2026. And we have a lot of mechanisms that we can use to eradicate this. Number one is our LNG projects. We have used LNG projects. If you look at the Romvuma projects or the Coral 4 projects, this is huge LNG projects. If you look at the Tokyo Amain, which is beside the border of Mauritania and Senegal, we're looking at what? Is it more than 15 TCF of gas? If you look at some of those other projects that we have in Mozambique and Angola, all of it is LNG. So gas. Now, where does this gas come? And that is when what we call the deep water E&P comes up. So we still have to invest in the oil and gas for those deep water E&Ps to bring either the natural gas or the associated gas for this LNG stuff to take place.
So that's a nice segue for us to go to our business intelligence guy. Jason, I'm sure you look at these kind of things and clients come to you all the time with this kind of information, these kinds of questions. How would you respond to that? And do you have any insight additional about the gas projects that we're hearing about?
Yeah, I mean, I think it is certainly from our point of view, you know, gas is a huge focus of our business. We work in oil too, but I think these days it's increasingly natural gas. You know, I think the sort of resource extraction projects are very interesting. We're working on a number of those. I think in terms of sort of wins for the region, I think what we see increasingly is sort of import projects where we're seeing sort of in Senegal, Benin is looking at LNG, so is Morocco, South Africa, huge sort of project that unfortunately seems a bit troubled right now. But I think those are the kinds of projects that sort of have from an investment point of view, there's a good strong return in terms of importing, but I think also just the sort of impact on sort of, you know, when you hear a presentation about Democratic Republic of Congo and electrification is 15% of the country, you know, that's an enormous opportunity as well as being sort of a problem to solve. So I think increasingly what, from a global LNG perspective, what the LNG business is looking for is less about supply and more about demand. And I think Africa, you know, has the potential to provide significant demand and sort of benefits that flow from that over the next, you know, 10, 20 years.
Yeah. Thank you for that. And I think that reiterates a message we've been hearing. Let me jump ahead and switch gears a little bit. And Scott, I'm going to ask you this question first. We're in Houston. We're in the U.S. Probably would be more people here if the U.S. hadn't initiated a travel ban. So this question is about U.S. government. I mean, what can the U.S. government do to help support the efforts of all of us here, to help support your efforts, and also conversely to help African countries in terms of doing business with partners on this side?
Well, let's see, I'll go back to my time at Halliburton. So one example, and I know the program has come up and down, but Exim Bank for larger projects. There's a construct there that I think is very useful, especially for, maybe for the larger projects, but ones that bring American companies to Africa, but also encourage, if you will, local development at the same time. So the concept of Exim I always liked, and so it's I think something worthy to pursue.
Thank you. Stephen.
Well, again, starting in 1981, when I first went to the continent of Africa and I was in Nigeria, this problem of the greater part of the population not having access to power still exists today. Okay, you're talking 40 years later, and it has not grown significantly to make a difference. And so when President Obama was in place, he had Power Africa. Yeah. However, I don't think that it really got down to the, people where it really needed to be. And I think right now, with the current administration, we have that opportunity to define Power Africa and come in with some significant investment that gets to the core. And having one run at it and look at what we did wrong, I think we have an opportunity to do it right this time. And I think that is going to happen with this administration.
I'd say I'm just the moderator, but I fully agree with that. And I think that conferences like this have a real voice to play to the U.S. government for entities to help that happen. Ernest, let me go to you now and move on to a different topic, but that's related. We always hear the problem with investing in Africa is balancing the risk and the rewards. So you're a project guy. How do you look at that? How do you balance the risk and reward before you go into a project or advise others that it's a good investment opportunity?
First of all, we have to realize that Africa has 55 independent countries, and each country has its own peculiarity. Mm-hmm. And what some of us out here in the Western world are trying to do, we're trying to take one-size-fits-all technique. It doesn't work. We have to hone in, first of all, on the due diligence of that particular area before we go in. Secondly, the U.S. government has been doing a lot. The African countries don't want aid, they want assistance. They don't want aid. See, this thing has been approached for so long on the fact that we want to give them aid for this. We want to give them aid for that. And there's nothing to show for those aids. They want assistance to be able to assist them to get to a certain level where almost as the developed countries. Don't forget now, the development of the developed countries came from the resources of the underdeveloped countries. And so the underdeveloped countries also want to be developed. And now the greatest potential they have to develop is through the energy sector. And so while the energy sector is also developing, we're paralleling that with our new ESGs. Well, there's going to be a conversion point before they converge. And we have to slow down on the renewables and kick off the environmental stuff, which we still have in mind. Don't get me wrong. Mm-hmm. We need to invest in that energy industry, which has a recourse into the agribusiness, because you need fertilizers and everything in almost all the businesses, plastics and jet fuels and all. So where does it come from? It comes from the legacy oil and gas. And if you notice, it's the big companies, oil companies, that are pushing the ENS, the renewables and so on, because they have gotten their bank where they can finance things from the oil and gas. So get it short, policies that will encourage investments to come in, good governance and all that. We can go there and there and up on that. But what I'm saying is that the assistance should come in, should balance, as you say, balance the risk and all. But before you do that, you have to look at your due diligence look at the meteorology, make sure that whatever you're doing, you have local participation and not a local participation. You got to take it all the way to the source. So that way it empowers the local people to know that we are benefiting from it. And then we're going to have reduction in all the strides we hear watch on the TV that this is happening because of this or that. It's going to cut all this down.
So you hit on something that I know Scott mentioned earlier, and I've heard others mention throughout the morning, and that's this ESG component, environmental, social, and governance. So maybe we can talk about that from this panel a little bit. Jason, let me come to you on this. When you talk to clients or in your intelligence research, how do you program in, how do you discuss ESG as a benefit to potential investors to manage some of the risk and rewards out there, if you would?
You know, I mean, it's sort of strange thing. Spend 30 years. I've spent 30 years in energy, and everybody's always talked about carbon, and nobody's ever done anything about it. It's just been a series of bullet points, usually at the end of a presentation, and now it's the whole presentation. Really, is sort of carbon and decarbonization. So, in some ways, I think to sort of put the cart before the horse, that there's this idea that we're going to decarbonize the world now, and that, in 5 years, we're going to cut carbon emissions 60%. Germany, 65% by 2030 is their target. It's completely impossible. And the current chancellor, who just took office yesterday, wants to speed that up. So, these sort of strange expectations. I think you have to sort of take that seriously. Clearly, there's a problem. I think when you look at trying to execute projects, you have to sort of build that in. I mean, in LNG, in oil and gas, you're building, 20-year assets, 30-year assets in a lot of cases. And I think sort of pretending that this is not happening is unwise, because, your project, carbon is going to, really the way to look at carbon and decarbonization from an industry point of view is what it's going to do to your costs. It's going to cost you more to produce more energy with less carbon emissions. And so I think the risk, risk, the previous question was about risk, and risk comes in all these different flavors. Mm-hmm. And I think one of the things is, are your costs going to expand over time? You can sort of put in a project, you can drill wells, you can build an LNG plant. And the question is, how is that going to hold up over time? And I think that's one of the things that when you're trying to develop a project, you want your money now. You want to start building now. You want to start generating revenue as soon as possible. But I think not sort of taking the longer point of view about how your costs are going to be affected is sort of leads you to problems, 10, 15 years down the road.
Sure, thank you. So, Scott, this makes me think of that slide you showed with the community in the Kavango Basin and the water wells and all that. How do you think those community members would feel about some of the things coming out from COP26 and some of the things that are asking the rest of the world to speed up its energy transition? I'm sure they're very happy to have the work that is being done there. How does that play on the ground?
That's a hard question. So from my experience on the ground, so as an example, beneath the Kavango Basin is a wonderful aquifer, but unless you drill wells, you can't see it. And so the reason we've moved, to essentially donating water wells is to basically start something that's an immediate benefit to the population. Now, in terms of COP26 and the various forms of that, I mean, to the point that was made earlier, we have to build that into our economics, right? And you have to look at it, I think, from maybe a different point of view. So, for example, as opposed to flaring everything, if you have a gas to power solution and you're near enough to a grid, then it's an acceleration.
Sure.
Right. To be honest, I think if, Windhoek versus Kavango, I think the people in Kavango are more just worried about day-to-day survival.
Right.
Right.
And that was really the point I was getting at. So we keep all of this relevant. The folks on the ground have their day-to-day worries, but then at the higher level, the government level, they're having to institute policies and requests that come from international actors.
They just want to be able to improve the lot in life for their families.
Mm-hmm. And, so I'm going to come back to you, Stephen. What if you had your choice to really speak to someone in government to help establish frameworks, okay, to make your projects more successful, to make the likelihood of success more probable? What are some of the things that would help build the right kind of framework? I mean, we here in this room have an idea, but we're not all the decision makers.
Well, I'm inclined to tell those that in power that they're making a big mistake by going all in with electric and thinking that that's going to be the solution for the world in the next 5 to 10 years. That's a mistake, period. Whereas the developed world has power. They're starting to build electric vehicles. They're putting EV chargers across the country. We don't even have enough power in many nations on the continent of Africa to power the daily households. All right. And there's more countries around the world that looks like the continent of Africa than looks like the United States and Germany and the UK. So I think that this all in unrealistic time frame of just going to change the way power is perceived and utilized to reduce emissions, I think they're missing the fact that it's not going to happen, okay, regardless of their aspirations, and the fact that there's an all-inclusive strategy that they must continue to maintain because we still need all of the power sources in order to bring up the entire world and the other countries around. So it's, we got a ways to go, but what would I tell them? I tell them they're on the wrong track.
Well, I think they should ask you, actually. Jason, let's continue on with this framework question, because I think one of the good things that come out of a conference like this would be some solutions, some guidance. What kind of framework advice would you give to government decision makers to help those of us in this room be more successful with our investments and other efforts in Africa?
Yeah, well, I mean, I think it is partly the sort of all of the above approach to energy. I mean, solar works, wind works. And, for countries with energy poverty, depending on huge imports of LNG or diesel or whatever it is you're going to import, can be a burden. These markets are volatile. I mean, anybody buying LNG right now is cursing the LNG producers of the world. It's like $35 a million BTUs. In the US, we pay $5. Actually, I guess about $3.50 now. Prices have come down. So the global market can be very unforgiving. But I think it's sort of understanding sort of the long-term risks, the long-term requirements to sort of bring power, energy to more people. But at the same time, sort of have, I guess, more of a down-to-earth sort of practical approach to sort of solving a problem. The people you serve rather than, like I said, Germany's a great example. Germany's turning off its a couple of nuclear power plants this winter. Europe is, in this huge energy shortage, and they're turning off, their biggest source of zero carbon power. And that's a government action, obviously, that's deciding to do that. So I think, what I always, how I judge an American president, Barack Obama, I thought he was a great president, mostly because he didn't get in the way of anybody. The United States permitted and started building almost all of the LNG projects that have come online now went during the Obama administration. The Obama administration didn't put any money into those. They didn't encourage the development of those, but they managed to stay out of the way. And, for me, that's usually what I want out of a government is one you hear from as little as possible.
And at least, as you say, they created the entities that allowed us to access them and hopefully get some benefit out of them. I see, Ernest, you're chomping at the bit to respond to this, so please go ahead.
Yeah, because I agree with whatever you said here. And we need the energy mix. But first of all, we talk about what does it take to bring US companies to invest in Africa. I have three words: trust, trust, and trust.
Yeah. Okay.
If the investors don't trust what they are told or what they are reading, nothing is going to work. And those who are welcoming the investors don't trust what the investors are telling them, nothing is going to work. So trust is one. Number two, governance in all its form, where there's accountability, where there is regional and local participation and sustainability in the environments. If the people know that whatever comes in, they're going to be part of it, you will have de-risking. And, we talk about de-risking operations, de-risking projects. This is one of them. I know you're a strong person in the CSRs, social corporate responsibilities. Now, those responsibilities need to be felt right down to the grassroots, and it has to be continuous. That's where the sustainability comes in. So whatever policy needs to be put in place, we have a lot of US organizations that are there to assist, but sometimes it's so scattered that some companies don't know which to turn to. So we have like the Africa, what I call it, is it powerhouse or something, which can help industry, to go navigate and see where those fundings are and how to operate. We have companies here locally who are consulting companies that can do a lot of due diligence and see how those investments are coming. So the US actually has the tools, the capability. It's just refining it to suit each particular region, and also taking the bold step to see how they can go across the regions. So that way they can put big entities together and then work with that.
And so, Scott, let me ask you, and then we'll finish with this topic. But just on that point, what were the kind of things that led you, Recon Africa, to go into Namibia? Did you have those kind of trust building discussions with the government before you went there?
Yeah. So the founders of the company back in 2013, 14 did a global search above the ground to see, the governments, see the histories, talk to people, look at the petroleum laws, and then, of course, below the ground. And then certainly Namibia and later on Botswana, based on those discussions, felt like, at least the founders felt that these were good, stable democracies. I think they're two of the older democracies, that they had a good infrastructure, and that they felt that the petroleum law was well thought out and stable. So yeah, those, you're right, exactly. Trust is where has to be there. And then you kind of build on that. And like I say, so far in Namibia, the trust has been well placed.
Okay, great. We're gonna save about 8 minutes at the end for questions, but I just want to do one last quick round with our panel here. And I'm going to ask first with my friend here, Stephen. Tell us, if you will, your best project and the best opportunity it has to succeed.
Mm-hmm. But I don't want to repeat myself because I've kind of said it over and over again.
Okay, well, let me okay, go ahead.
It is solving part of the problem of many producers in the fields who's being fined, that's actually, emissions are just happening. And that's just money going in, just being burnt, okay? When you can capture that and show them how to make money, okay, right then and there. And so, I don't see, in terms of all the things that I do, that's the best project I've got on the table right now that I can offer.
Good answer. Jason, I'll ask you the same thing.
doing some work on is the Greater Tortue Amiens projects in Mauritania and Senegal, which are offshore LNG projects. So there's been sort of cooperation between a couple of governments, major oil companies involved. So I think that's been a fairly successful. The one phase has already gone to FID, and we expect 2 more to go next year, in the first half of next year. So I think that's looking very promising.
Scott, we might guess it's Namibia, Botswana, but I'll ask you the question anyway.
Yeah, no, I think I had plenty of time to discuss our overall projects. There's individual projects which have gone quite well, but I've had plenty of time.
And Ernest, last to you, if you had the one best project opportunity you think is out there for us.
The best project opportunity that is out there, I will say, is Oyster Company, the company I work for.
Okay.
Being given that opportunity to take the African oil and gas operations to another level, especially the NOCs and the independents there that don't have a lot of balance in their stats, but need to progress when we're looking at, eradicating poverty, energy poverty, and so on. And so the company is there to work on any project, be it oil and gas, agribusiness, fintech, or technologies, where we can take the rudimentary and also the scattered information, put it together, analyze it, make a headway, and make proposals for this company to get to their next steps.
Okay, thank you. So I hope we have 8 minutes and 45 seconds left. And I hope there's 8 minutes and 45 seconds worth of question and answers out here. So I don't want to be like the professor, but if there's someone I can, yes, sir, please go right
My name
ahead.
is Reggie Spiller. I'm a geologist. And this question is really for Scott. First, Scott, we all want to thank you for that excellent presentation that you gave about what you're doing in Namibia. It's probably one of the most, as a geologist, one of the most interesting projects, I think, that's happening in the continent. And I commend the work that you, Dan Jarvie, and the rest of your team have done there. So here's my question for you. So I saw your slides. You know, he says, my data room is opening in the first quarter. He's looking for an investor, interesting. He didn't tell us how much he's looking for, what he's doing. But Scott, tell us, in a perfect world, what would be the perfect investor for Recon today? How much? And describe what that investor might look like.
I'm not sure good in terms of the how much part. These are discussions one has with one's board, and et cetera. But we are a small company with a large acreage position, right? We have good knowledge, we have good expertise, but we would be looking for a company that has technical skills and the ability to help us develop.
So I see another question. Thank you. Thank you for that. From my friend Clemente from Equatorial Guinea. Please, go ahead.
Good afternoon, all.
I can't hear.
Hello. This question is for Ernest. Just a quick one. I would like to know if the very way forward is for the investors to ask for sovereign guarantees to invest in these countries in Africa.
Yes. Guarantees can come in different forms. One of those I will try to discourage is a guarantee where the country or the region is open to plunder. Plunder in the fact that nothing is guaranteed, or something is guaranteed to the point where everything gets seized when things don't go certain ways. Yeah, sovereign guarantees essential sometimes for some projects to be done, but it's that guarantee has to come after a detailed analysis, and that is where due diligence comes in, and the legal firms come in, and we can even take it a little bit further and do additional work before those, call it sovereign guarantees, are put in place. Yes, they do work, but not in all cases.
Thank you. Thank you. So we have another question. Yes, there you go, sir. Please, go ahead.
Hello? Hello? My question also goes to Scott. I've seen your seismic section you have presented, and what I have seen, the faulting suggests that most of your traps you will be locating will be structural. Do you anticipate also finding other types of traps like stratigraphic or other plays like basement oil, or mostly will only be structural?
Well, it's a good question, and we're early days into the process. But we're starting from looking at, this is a rift basin, and there are both structural and several kinds of structural traps you can find in rift basins, and that we can see potential. But, especially, for those who've looked at the seismic, you can see on laps, and you can see some very interesting stratigraphy. So I think stratigraphic traps are also quite possible. Yeah, I'm a little blinded by the lights on the, I'm happy to talk about that afterwards.
Thank you.
Right here. There's a question right there.
Oh, right here. Oh, yes, thank you. Got it. We have 3 minutes and 54 seconds. So we've got you and you, okay, the guy behind you.
I think just following my colleague, I could see your seismic section things so deep. I think the amount of sediments,
Most of the people
that you have is so thick that a possibility of having several matured source rocks in the column of the structure itself, that could lead even to production commingling in terms of drilling. I think that could be a very potential basin itself. But my main question is on the area of local content in your company. We have found it so difficult with a number of companies not embracing the local contents of countries, host countries. I don't know to what extent do you embrace the local content of those two countries where the Okavango Basin actually is located.
Yes, thanks for that question, and then I'm happy to talk about seismic after. In terms of local content, again, I've had the opportunity to see how it can be handled in other countries over my career. We felt from the very beginning that we needed to have not only local content, but local management. And so the affiliate is run by local Namibians. When you get to local content in the Kavango, you have to realize that there's East and West Kavango, two states, if you will. And then there are traditional authorities, and these areas also are representative, especially if you look at shooting of seismic data. So to us, it's just a founding principle that you have to have local content, and it has to not only be, if you will, it has to be there in a serious way so that it can, the local affiliate can run the company, right? So we've invested early on. You're always going to need, from a safety perspective and from a technical perspective, outside expertise, certainly initially, and then you transfer that. But in running the operations, setting up local banking, making sure that we're using local trucking operators, we start with looking for folks in Kavango first, then we expand the circle to other parts of Namibia, and then lastly, we look outside.
Thank you. Thank you. And last but not least, we have one more questioner, but sir, who just asked about local content, thank you, because that's the first time I've heard local content mentioned today, and it's so important. I'm glad you brought it into the room. Sir.
Thank you. My name is Mikiu Zanokuru, representing Columban Jewel Risk Management. We are a professional services company operating out of the New York, New Jersey area. I actually found Mr. Hightower's story very inspiring, venturing into Africa and, developing his company. But my question is for all the panelists. The U.S. State Department had an agency, I believe, called OPIC, Overseas Private Investment Corporation. I believe they might have changed the name recently. But my question is, in your ventures, how has that organization supported your investments or projects in Africa? I know they support, I think, insurance programs and some financing opportunities that they provided. So I was just curious if you may have benefited from some of those programs.
Thank you for that. Steve, why don't you take that up first?
Previous 4 years, that was very challenged, and a lot of the programs were basically disbanded and just now coming back and being refunded. So there was a low in the opportunity, $10 million max or something. It was very small in terms of the types of projects that you can actually do on the continent. But it's coming back now, and people are being put in place. And I think that those are viable alternatives for small businesses like myself. I mean, I'm not a conglomerate. I'm not Halliburton. I'm just an entrepreneur who came in and grew it from scratch. So doing it that way, utilizing those types of agencies is a must because it gives you some protection when you're doing business overseas.
Anyone else want to quickly chime in on that? And if I'm not mistaken, OPIC is now DFC. Is that correct? Development Finance.
I don't know.
Does anyone know that it's now DFC, correct? Yeah. So it's still out there, but it's not OPIC. But yeah.
Yeah. Well, I was just going to say in LNG, the volume of capital needed for some of these projects, 10, 20, $30 billion, you get a significant impact from trade development authorities, from companies, entities like OPIC or export-import banks, banks in particular, sort of supporting, and in LNG, see the U.S. is pretty active. Italy is very active. Korea and Japan also providing a lot of money. So, I mean, they're sort of almost seed money. They sort of signal that you've got government support as well as providing sort of material amounts of capital.
Well, thank you. I just received the sign from the organizer. Our time has come. Thanks for that question. And I would just add, they're out there. Go knock on their doors because they're trying to give money away. And so they're out there.
Trying to back it.
Well, they are. At least the new administration says so. So let's try to take them at their word. We'll strive. Thank you for your attention. Thank you to each of the panelists. And thank you, James.
Thanks to Ken and thanks to our panelists. I'm sorry we couldn't have more time for this very interesting panel. Before lunch, we have one more presentation. It's a very interesting and important